Did you miss the bond breakout? Well, you're going to get another chance. That and the dollar's about to break higher. All that and more on the Sunday night charts. We take a look at charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me. Moving averages, 21 days in red, 50 days in green, 100 days in blue, 200 days in tan, and these are all the colors on your screen. Price versus momentum. Price is a general direction. Prices are headed. Momentum is a rate of change. A bullish indicator for both is positive, and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of trade, help with time and trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500. We saw how this broke out of its supply zone. Where is it headed? Well, let's take some math and see if we can figure this out. No major changes here. Momentum on the 21-day slid a little bit to bearish, but that isn't a big deal. Let's take a look at the charts and see how much further the S&P is likely to go. And you can see it's over its 21-day, 50-day, 100-day, 200-day moving averages. Is one of the longest stretches over its 200-day. Now, these supply zones range from about 20 to 30 points. So if this former supply zone that was a sell zone has now flipped to a buy zone, you see the nice volume support there at 416 on SPY. What that tells you is the next supply zone, the next sell zone, is somewhere about 20 to 30 points higher, suggesting the SPY will get to 440 to 450 before it runs into sellers. So we'll see if that happens, where it's at. But the sellers are up there somewhere. We just don't know exactly where they're at. How about the NASDAQ? It flipped on the 21-day. The momentum is back to bullish. Everything else looks pretty clear. I'm not too worried about the 50 and 100-day here because the trend on these large caps is just, well, higher. So some of the longer-term momentum signals aren't that important. And here you can see the NASDAQ broke out of the supply zone here, which was a sell zone. So we had a defined sell zone but around 337, defined buy zone at 320. Buyers broke out, drove this higher. We have what could be the early signs of another sell zone here. There's not enough data to suggest. If this comes back down to 340, then we have a new defined sell zone. Is it realistic that it's here at 355, about 15 to 20 points? Yeah, it's about right. You look at the top of this zone here at 324 to 332. I mean, that's around 10 points. I mean, so it's pretty realistic. This could be another supply zone, but there's not enough data to suggest that it isn't. So for the moment, we'll just put that on a question mark. Trend is your friend, headed higher, but somewhere you'll run into sellers and potentially early signs of that going on in the NASDAQ. Let's move on to the small caps. Remember, small caps lead the large caps. So if you're a large cap investor and you're not paying attention to the small caps, you need to. If they're not confirming the large caps, then the large caps are going to have a mean reversion back toward the small caps. What do we see on the Russell 2000? Price on the 21 and 50-day flip bearish. That means they've turned down. Momentum remains bearish on the 51 and 21-day, leading the price. 100-day still bullish, below the 9 and 21-day moving averages. Not critical on the 9, 21. Could be an early signal if it flips over to the 50. We'll look at that. One momentum is negative and falling. Not a major deal. It's kind of like the 9-day potential early warning signal, but not a huge deal to jump at just if you see them flip. And what do we see here? Price has been below the 50-day moving average in green, below the 100-day. Just happened to close up there Friday. And you see the volume support is right in this neutral zone, kind of no man's land, right between the buyers down here and sellers up here. So you're in what is, let's take off this volume profile for a second. I want you to see this. This is now a 6-month sideways pattern. Now tells you it's either like the possibilities when you see a sideways pattern is generally it's a consolidation pattern moving higher. The problem is not confirming the large caps, suggesting that people are exiting these small caps, and this potentially becomes a peak. There's obviously not enough data to tell you which it is. It's very clearly defined. This is a sell zone. This is a buy zone, and prices are sitting right at the bottom of that sell zone up here. Under the 21-day moving average. Again, this close over the 50 and 100 is not a major move here, because the moving averages are pointing down. This volume support needs to hold so buyers can take this higher. If it turns out they can't, now we're seeing a revisit of the sells of the buy zone down here. And if we do see a move down in small caps through this buy zone, that tells you the move higher in the large caps, not going to hold at all. Always remember, small caps lead to large caps, and at some point we'll look at, I think we've got transportation sector in here. Now I need to add that. That is critical. Energy sector, flip bearish on the momentum for 21-day moving average, sitting below the 9, 21, and 50-day moving average, suggesting that despite oil prices grinding higher, that the energy stocks aren't seeing it. 1 month momentum remains negative and falling. That's not a major deal since it's not triggering any other warning signs. But look at this supply zone here, or this is the volume profile line. So in the last 6 months, so wherever you're at on your chart, when you have the volume profile, it tells you where the most number of trades have happened at a given price. So it's very useful. So we go to the 1 year chart. It happened not to move much, but let's look at the 6 month chart, and you can see that this is the volume profile line. So the question you're always asking is this going to be support or resistance? Is this volume support where there's a lot of buyers at or a lot of sellers at? So for the moment, it appears that the buyers have been holding this level. It also suggests that everything above is selling. So you look at everything above that line, sell down, sell down, sell down. If this doesn't hold, if this volume support doesn't hold, then XLE comes down here into about 40, right into the $49 range where you see the volume perked out here. Well, that is your next level of support. Obviously, those who are bullish on the energy sector, global economy, and all that want prices to go higher. The question that needs to be answered at the moment is this volume support buyers or above sellers? That's the question. The moment it appears to be sellers. So look for XLE to come down to reconfirm 49, bring those buyers back in, and then make another run at it. That would be the direction you want to see happen. So we'll see what happens on Monday. Financial stocks. Remember, these trade opposite the bonds. They're not perfectly inverse, but generally when bond prices are rising, financial conditions tighten. It's not good for bank lending. And you can see no changes on the price or momentum. Sits below its 50-day moving average. That's not the greatest thing, because when you see a move through the 50-day moving average, higher or lower, and it reconfirms that trend, well, that's the beginning of a move higher or lower. But let's take a look at that and see what's going on with XLF, and I'll restate that so it makes some sense. So when you see, and let's use the 21-day moving average here in red, because this is a classic example. So you see a move down through the moving average, so through the 21-day, and then it comes back up and it hits the 21-day, kind of hits the 50-day, and gets rejected. So what price is telling you is the moving averages is signaling that price is headed lower. That's what you see when it kind of crosses through a moving average and reconfirms. Now, I know it closed above the 21-day moving average, not much above. It could come back up and try to make another run at the 50. If it gets rejected there, well, the 21-day is going to lead it lower. Now, the nice thing, if you're bullish on financials, is there's a lot of support at 34, suggesting that that's where the buyers are at. Up here, this is a clearly defined sell zone, and down here is a clearly defined buy zone. I just don't have the other purple line drawn in, but we could, if we took this line here, duplicated it, and probably put it right at that volume support, you'd have a good indication of where that other zone is at. So for the moment, the trend on XLF is lower, which when we get to the bonds would suggest that the trend for bond market is higher, putting at question that reflation trade that a lot of people are banking on. How about the industrial sector? No changes on price and momentum. Looks almost just like the financials. And the 1 month momentum, actually, why did that say above? Did I not correct that on the financials? Yeah, I think I goofed up here. Let's go back and look at financials. Yeah, it is above. It closed right above the 21-day moving average there. Okay, so that's not a big deal, just 1 day. All right, on to industrials. Let's take a look at what's going on with there. It should look kind of like the large cap indices, because, well, a lot of industrial stocks are in both. And this is really interesting, isn't it? Because here's your volume profile line at 103, almost at 104. What is it telling you? When you look at this, everything above is selling, sellers. So the volume support is acting as resistance, suggesting that industrials are going to trend lower. And that means the next major support for XLI is here at 96. So volume support here is telling you that those large caps are heading the wrong direction. IWM telling you the large caps are headed the wrong direction. They're giving you some warning signs of that. Take a look at utilities. I think I need to add transports to this. We'll have to do that for next week. Price bearish, momentum bearish through the 50-day moving average, remains bullish on the 100-day, below the 50-day moving average. Not really a good sign. 1 and 3 month momentum. Now, when you start getting more than one of these on the short end, it tells you, what this is telling you is over the 3-month window, prices are below where they were 3 months ago, and that's not usually a good sign for momentum. Momentum likes the trend. So let's see, XLU. So looking back 3 months, if we switch to a 3-month chart, which is this 90-day chart, you can get a picture here that the price is below where it was before on a 1 month and 3 month scale. That's not good. Let's take a look. Volume profile tells you support is right where we've identified it. Buyers came in and defended support, so we know there's still buyers there, telling us that the resistance level above is still where it's at 65. The path for XLU should be up here to reconfirm across through its 50-day moving average. And if it rejects against that, I suspect we'll see it test 50-day. If it gets rejected, it's coming back down to the supply zone to find buyers. It's crossed through the 21 days, fighting against that. You can see the 21-day trend, even though it's crossed over here, it's telling you the path for XLU is lower. Now, many people are going to look at this and say, this is a bull flag. Here's your flagpole. Here's your flag. If it doesn't get going and it failed it here, it's telling you it's getting rejected. This is not a bull flag. Jury's still out, but the trend is not looking too good. How about large gold miners? If you're looking for the reflation trade, you're not finding it here. The 100-day moving average flipped to bullish. That's not a big deal. Remains below its 2150 100-day. That is not good. 3, 9, and 12-month momentum means it's below where it was 3, 9, and 12 months ago. The trend is lower. The 1 and 6 month happened to be negative and rising. If you're looking for some good news, there it is. Let's take a look at GDX. And what do we have with GDX? Yeah, this is not a good picture. You can see 21-day moving average down, 50-day moving average rolling over, heading down. And while it's not confirming against the 21-day moving average, if prices sit down here, it's 21-day moving average is going to confirm against it. And you can look. Remember, we talked about this volume profile potentially being support. And what happened? Price crashed right through it, found support at the dotted orange line, came back up, got rejected at the volume profile, telling you what? Sellers above this line, that all this buying move got sold into. Price came back down, retouched support briefly before rocketing higher on Friday into that volume support, telling you that, again, this is where sellers are at. The direction for GDX now, based on volume profile, is down here to the $30 support line. That this should, I suspect we'll see a break here. Again, not good for the broad equity market because gold miners are telling you there's no reflation trade going on. How about emerging markets? Not pretty picture at all here. Bearish cross 2150 and 100-day moving average price and momentum all trending lower below all the moving averages. The only thing it hasn't triggered is these longer-term momentum signals. Remains negative on the 1 month, not an issue at all. But the other trends tell you this is not good. Let's take a look at EEM. And what do we see? A very clearly defined sell zone up here. There's your volume profile confirming that is indeed sellers above it. Price looks to be below that. And let's zoom out to the 1-year chart, telling you the direction for price now on EEM is down to about 51, right in this range, right, this little cluster right here. The natural direction for price should be down to 51. Not a lot of support there. Fails that, now you're down into the $45 range. That would be signaling a risk-off move. And what kind of currency move are you looking for? That's right, stronger dollar. Good job, you got it. High-yield bonds, man, the yields on high-yield bonds are super low. People are taking a lot of risk with junk debt, and they're not getting paid for it. In my opinion, price remains bullish across the moving averages. Momentum flip bearish on the 21-day, sitting below its 9-day moving average, which is nearly meaningless. I say nearly because it is pretty much nearly meaningless. Let's take a look at HYG. People can't get enough of junk. And there it is. Now we know volume profile was resistance. Turned out it wasn't. That was where the buyers were at. People want junk, taking this higher. Let's zoom out over maybe a 2-year period. It's not back at its 2-year high. I mean, it's working there. There's clearly going to be some resistance from sellers here. But boy, people are taking risk and, in my opinion, not getting compensated for it. But if that's some validation for higher equity prices, you do need high yield bond prices to move up. All right, on to long-term Treasury bonds. TLT, of course, as we know, Bond King's favorite. Price now bullish on the 100-day moving average. Means it's curved and turned higher. Momentum remains bearish on the 100-day. It should be flipping in the not-too-distant future. Above all its moving averages, 1 and 3-month momentum positive. 6, 9, 12 now all negative and rising. This is the breakout that you may have missed. The Momentum Timer Pro nabbed it. We've talked about it on this show. And this is your last chance. And I want to get into this because some people were worried. It's like, hey, trends don't just go straight up and down or straight up. They're going to have some, moves down. Sellers are not giving up here. Here's your volume profile line. Now, as we study volume profile, what does this tell you? This is where the buyers were at, all down here under this volume profile, and it broke higher. So that's very important that you study the volume profile. It doesn't matter what charting program you use. Most of them have it on there. But let's go back 2 years now. And I've got these dotted purple lines. So this is your last chance on TLT before it goes. So if you missed it this whole time, this is your last chance. Where did it get rejected? Here's the peak going back to 2019 and back in August. Here we are in July 2021. 2 years later, gets rejected. You can barely see it, but it gets rejected at the same point. This is the seller's last stand. Why is that? Because look what happens to price above this point. See how it went up a bunch? And see here how it moved down a bunch, which tells you the next major move for TLT is to 157. So what you saw here is sellers come in, last stand. We saw this in the sentiment on Twitter, people talking about shorting TLT at the 200-day moving average. It came back down, and look at the volume profile of 2 years. It kind of now gets caught up at the upper end of this volume profile range. It's a good sign that the buyers are bending under here. That's exactly what you want to see. Now, can this come down a little bit more? Sure. Is it likely to come all the way back down and revisit what is about 2.4%? It's pretty unlikely because we know there's buyers in here. We talked about on the Friday macro show that a lot of some CTA machines from Morgan Stanley are about to kick in next week. We've got the CPI next week. So we've got some reasons here that price can consolidate a little bit. And you can see it consolidated for a few days over here, and then following the trend, move down. Now the trend is up, telling you the next major move for TLT, it will zip up here to 151 or 152. Shouldn't stay there too long because these machines are kicking and buying. And then now you're up into the next resistance level is right here at 157. This is about 1.6% on the 30-year. So if you miss this move on TLT, if you're not signed up for Momentum Timer Pro, it's linked in the description. It's free. The next report comes out on Monday at the moment. So it's a free open beta. You saw the signal on it. It's been over about 6 weeks. It flagged a buy signal on this. And now you're seeing the last of the sellers, because once these sellers are flushed out here, there's nothing to stop price from going higher. So there's your last chance on that. When we get to the dollar, we'll talk about how you still got an opportunity on that. Let's take a look at gold futures. Above the 50 and 100-day moving average now, flipping over that. Still below the 50. I don't like it when things are below the 50 or below the 21. But 1 month, 6 months, and 9 month momentum are negative and rising. There's your pluses. 3 month momentum is positive. In the midst of this is not good news. 12-month momentum negative and falling. That's not a major issue. If you're in a bottom, that's okay. Question is, are we in a bottom on GDX? Or is there more pain to come? All right, so here we are in a bigger picture pattern. Many people said this was the breakout to new highs. I didn't think so, and so far it doesn't look like it. What it's telling you now is this is all part of a bigger topping pattern right in here. Let's zoom into the 6-month chart. Boom, there's that volume profile that we saw on, we're looking at GDX. Whoops, we need to be looking at gold. You didn't tell me. All right, here, 2 years on gold. Look, same topping. Like, if you're looking at this and you're saying, I see a bottoming pattern, you're looking at it wrong. This is what a topping pattern becomes, is where moves higher get rejected, moves higher, rejected, moves higher, rejected. Now let's zoom in. and see, look at that volume profile line. Is the question is this acting as support or resistance? It's kind of hard to say because look, gold came down to 1750. I said that's what happened. It did that. It shot up into the supply zone up here at 1800s. It could make another run at 1820. If it gets rejected here, now you're coming back to 1750 and then potentially down to 1690 again, or 1670s again, 1690. I have a hunch that this volume profile line indicates what we've suggested, that is sellers, that above this is sellers. This has been a sell zone. So it's telling you that the sellers are driving the tape here, and I would look for that to maybe hang out here briefly before the sellers drive it lower. I mean, at the moment, this is the seller's game. Let's take a look at what's going on with silver. Below the major moving averages, price momentum, both bearish. Now remember, when you see a lot of red, just when you got to start looking for bottoms. I don't think gold is at a bottom, but we'll see what silver looks like. One momentum negative falling, all the other momentum trends good. Let's say, what do we got going on? Silver, what do you got? And this has been a beautiful sideways pattern, and here you can see it. We'll zoom out. Clearly defined sell zone, clearly defined buy zone, and on 1 year chart, volume profiles telling you that above this is validating sellers, and the direction for price should be to come down and reconfirm the bottom of this buy zone or top of the supply zone, say just around almost a 20, just under 25. Let's zoom into the 6-month chart. Again, also confirming the trend is to come down here into this, high 24, 25, low $25 price range. That's where your buyers are at. And the volume profile is telling you that's the direction. See, look, it came down, hit the bottom of the buy zone, got rejected. It tells you the path of resistance now is lower, not higher. And your last opportunity, if you missed it, well, the dollar, you didn't miss. It's still in play. And what you think, what are bonds? They're deferred dollars. So if bonds are headed higher, the probabilities a dollar is going to fall is pretty good. And look at this. It was all red at one point, 21.50, 100-day. Price is bullish, momentum's bullish, momentum timer pro. Again, if you're not signed up for that, take a look at it. If you are, go look at your Friday report. You can see the trend is great. Below the 9-day, don't worry about that. 9 and 12-month negative and rising. I mean, this is about as good as it gets at telling you there's a bottom going on. We identified it in the show. We identified it with Momentum Timer Pro. And now let's look at the trend here. You have this diagonal line. You can see shorts. Shorts are trying to defend this. And it's sitting at the bottom of this supply zone, the sell zone. If it can't break through down here and it starts to move through these shorts, you're going to see the people that short here cover. The shorts then here cover. Shorts here cover. The shorts here cover. And that's why people like these diagonal breakouts, because that's what it tells you is that people on that trend line get squeezed out of their short positions. A break over 94, we've talked about that. We'll zoom out onto the weekly. A break over 94 passes to 103. So you haven't missed out on this, but I'll tell you what, the bond market is telling you this is coming. Let's look at the volume profile on UUP, telling you clearly the buyers are below there. So that is validation on the trend. Here you can see this is about 94. Let's go look at DXY here. So yeah, 94 is going to be where those two peaks were. Let's go back to UUP. Yeah, so you can see this volume profile line on UUP at 25.20 is critical. Gets through that, it tells you everything below has been bought up by the big players as sellers believe the dollar is going weaker. That's your catalyst all the way up to the DXY on 103. So there you go. You've still got a little opportunity left on TLT, and dollar tends to follow bonds, so you can jump on that. And if you didn't sign up for Momentum Timer Pro, link is in the description below. You have to click the little arrow to see the full description. Next issue comes out Monday morning. The content of this video is provides educational information only. It's not intended to provide investment or other advice. Shows not to be construed as recognition or solicitation by selling security, financial instrument, or participating in a particular trading strategy. This video was prepared by Steven Van Metre. Personal capacity opinions expressed in this video that do not reflect the Valid Financial Advice Inc. or Steven Van Metre Financial.